Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the Russell 2000 ETF, ticker symbol IWM. And if you watch my report from last week, you'll know that this diagonal line here that I drew last Friday was my forecast line, with the end of that line right there being my target, 217.38. So as you can see, like clockwork, the market went right to that target, and here we are right now. It's almost as if the market was following that line. Now, we know that's not the case, but this is, again, another testament to how powerful technical analysis is as a forecasting tool. So what does this mean for next week? Well, interestingly enough, if I take a step back, you'll see that we have a key support level down here that is maintaining quite nicely. And as I erase all my forecast lines, you see we hit those, so we don't need those anymore. We have a support level that's more or less intersecting with these lows, and we are approaching this low right here. Now, if you're a member of our Option Oracle or Equity Oracle Trade Alert services, you will have heard me say that we're going to be taking action should IWM drop below 210. Now, why is 210 such a significant number? Well, that's because a close below 210 would bring it below this low, and now we are more or less breaking out to the downside of this topping pattern that I originally called on May 21st. And again, to repeat, because I have to keep repeating for the record, on May 21st, right back here, I said that I was calling a top, and I was not calling a high, I was calling a top. And I also said it takes about 3 months for that topping pattern to complete. Now, next week, I think we're actually going to bounce a little bit. I think we'll go lower and bounce. But I think this is more or less the beginning of the end of this particular trading range, because if you go 3 months out from my original call of the top, we're approaching July 21st, and then we're getting into August 21st out here. And so by then, the markets could already be below this key support level that I pointed out to you here. And then what does that mean? Well, it means that the markets are now breaking out, and the former support will start to turn into resistance. And this is a concept that I talk about quite often. It's role reversal. If I go to a weekly chart, you'll see this. Role reversal is when a former support level, once broken, turns to resistance. I'll draw a little line here. Again, support with an S, support. Again, these are all weeks. Each one of these low shadows more or less bounced off of that support. And here is support. If support breaks right here and we go a little bit lower, the support will turn into resistance. And that's why below 210, we're going to be getting out of long positions, especially for the option traders, and we're going full speed ahead, grizzly bear mode to the downside. So we still have time, again, but the sands in the hourglass are quickly falling, and we're running out of that time that so many people have counted on. So what I would say is this is more or less a warning for those who are the buy and hold types to, I'm not telling you get out of cash and liquidate your whole position, at least not yet. But I do believe that it's a good idea to start moving into a position that gives you opportunity on the way down. And therefore, embracing risk management strategy is a really good idea right now. Really good idea. So here's my forecast for next week. I think we're going to go down just a little bit more, and then I think we're going to bounce. Again, a little bit more. We got a slight drop I'm expecting on Monday and Tuesday, but because we have a drop in volume today, I mean, this is a big down day, but it was on lower volume than yesterday, and you can see that the CCI is starting to turn up. So I think we're going to go just a tad lower Monday, possibly Tuesday, and then I think we're going to see a little bit of a bounce there, right? So don't be shocked by that. That bounce doesn't mean, okay, everything's all good now. It just means that, we could be bouncing off of support and we got some bottom fishing going on. but that's going to be my forecast for IWM, giving you a number target for those who are option traders, 219.01. That's IWM. Now, if we look at the S&P 500 right there, we are on our way to that target level. Now, this is different than the IWM because if you notice the volume here, the volume is increasing on the way down, and the oscillators are not turning up at all. In fact, just the opposite. Down here, as I magnify that, the CCI is just about to cross below that zero line, aka the momentum line. So I think that the S&P is going to wind up lower next week, and all I'm going to do is extend on this right there. I'm going to extend that to the right to give you the angle, but this target right here is going to be a support level, which there as well will be a role reversal. Remember, former resistance broken turns to support too. It goes both ways. So I think we're on our way down here. This is going to be my target for the S&P, 424.4. And then we'll have to see whether or not we continue lower to fill some of these gaps down here. I normally don't go that far out with my line for forecasting, but that's what I am going to put on there for you right now because this is really a topping pattern that's close to completion. So that's SPY. Now, we look at the VIX, which for the most part is inversely related to the S&P. I left this horizontal line up here as a hard line target right there. I'm not doing anything with this line whatsoever because I think we're going to hit that at 2163. I'm just leaving this horizontal line as my target until it hits, and then we'll have to readjust. Notice what's happening in the VIX. Today, this was a red candle at one point, and it looked like, oh boy, okay, VIX is taking another dive lower, but it did an about face. I think investors are very confused about the direction the Fed is heading. I don't think they even know how to control inflation. I think the worst thing, again, this is my personal opinion and professional opinion, I don't think it's a good thing to let inflation just run its course because that could be pretty ugly. And with the state of our world right now, with the COVID variant, the Delta variant coming out, I think this could be a real threat next month. I really do. I mean, we're expecting workers to go back in September, but if this reporting in the media continues to push the panic button on the Delta strain, then we could be in a position where investors say, you know what, I'm not going to take a chance and hold on at this point like I did, last January, February, March. I don't want to go for that roller coaster ride again. So you might have a lot of people just moving the cash as a safe haven until they figure out what they want to do. That in and of itself, the action of moving the cash could push prices lower. So that's the VIX again, reiterating that target of 2163. All right, now let's go to the diamonds, DIA. Look at that, amazing. It's like the market's following that line. Once again, increase in volume on the way down on guess what? I'm going to magnify that for you. Some of you already know what I'm going to say. That's a bearish engulfing candle. We had a bearish engulfing candle here, and that panned out to the downside in a big way. We have another very pronounced bearish engulfing with increasing volume on the way down, gap below the market. Oscillators are crossing with sell signals here and here, and so we have a gap below the market. Therefore, I'm not moving that forecast line. I'm holding the target just like that. I think that gap is going to fill as soon as next week, and then we'll have to see if this moving average winds up acting as a support level. Again, still too early to tell. I have not changed my stance one bit at all. Again, maintaining that position of risk management and helping people learn how buy and hold may not work very well in this scenario moving forward. Okay, so that's the diamonds. Again, for the target, I'm giving that at 344.10, keeping that in place. We almost got there, but not yet. I think next week will be the week for that. All right, let's take a look at Qs, and then I have one more special announcement to make. The Qs are on the way down. We got the red candle showing up. We have a slight drop in volume, so this is going to fall more or less in the category of the Russell, But notice the oscillators down here. We have some conflicting signals where normally a drop in volume like we see down here tells us that if the price is moving lower and the volume is dropping, the sellers are losing momentum. But the momentum indicator down here crossing the zero line on the CCI, it really conflicts with the volume. So I think I'm going to go with the oscillators on this one because we're moving towards this moving average here, and we'll have to see whether or not that maintains as support. So what I'm going to do right now is I'm just going to draw a horizontal line on this one from that target, just like that. And then I'm going to move my target over to make sure that we're matching exactly. I don't want to miss out on that. So I'm going to duplicate that. Same angle and everything, just like that, putting it right to the target price, and then we're going to drop it just like that. So I can get rid of this one, still maintaining the downside price target. If you option traders are looking for strike prices, that would be it right there at 349.16. Again, still forecasting lower. And remember, we have a gap way down here. It's still too early to call that one, but I do believe there's a very high chance that over time that gap is going to fill. So keep an eye on cues. Remember, I show this almost every week. You got to look at this. This is the monthly chart for the cues. Shooting star. See that? Negative divergence. Again, look at the monthly chart on IWM. Check that out. You want to see a bearish engulfing candle? It's not just engulfing last month. It's engulfing the past 4 months of price action. So if you had bought any time over the last 4 months and still holding a long position on those shares, you're losing money. And investors don't like to lose money. They get really upset when that happens, and they start to get a little antsy. They get unsettled, and they say, you know what, let me move more into cash. I don't want to suffer more losses here. And that's when the dominoes start to fall. Now, I normally don't comment on silver. I'm not going to do this on a regular basis, but I am showing you that we have a very nice pennant / wedge forming in the silver markets. This is the monthly chart, and you can see even though we had a down day today, we have higher lows while the highs continue to maintain horizontally. This is known as a flagpole, right? If I condense this, this is actually my price target right here. A breakout of this pattern could result in silver going to 43.79. Now, why am I mentioning that? Well, I've been asked by the Market Rebellion folks to put together a series of tweets and social media posts where each week I will be reporting on the silver market and what I'm seeing. This is just a snapshot of what's to come, and this comes to us. The source here is Metals Focus, and you can see the change in production in silver over the past year. This is not, by the way, including 2021, just from 2019 to 2020. The top 3 silver producing countries right there are showing dramatic drops in their production, particularly Peru. Look at this. In 1 year, their production dropped 19%. Now, that's a heavyweight there in the world of silver production. But overall, the total number of ounces produced has dropped in 2020 from 2019 to the tune of 6%. That's part one. So if you paid attention in Economics 101 class when you were in school, then this should make sense to you. If production is dropping, what is that going to do? It's going to, again, cut the supply, but we also have to look at demand. We'll look at the other side of the equation here, right here. Industrial demand for silver has increased from 2020. Now we're moving into 2021 right now, but the demand for silver has now increased by 7%, and we're not even done with 2021 yet. Main reason, technology. Technology consumes silver, and pay very close attention to 5G technology. Pay very close attention to Starlink. When you hear about a rocket going up to launch another satellite, pay very close attention to that, because tech companies are gearing up for 5G. Solar panels are being produced for people that want to cut on their energy bill. We got more batteries being produced in the EV market. Guess what? They all use silver. So consumption is going to increase. You know, back in the day in 1980 and early 80s when I was trading silver, Kodak was a big consumer of silver because of that's how film was processed using silver. Now that we've gone digital, Kodak is no longer a factor. But now what's replaced Kodak back in the day is now 5G technology and EV markets and solar energy and so on and so forth. So I'm still extremely bullish for silver. And on top of it, CNBC did a special 15-minute presentation on Reddit and what they're looking to do. I believe Reddit still has silver, SLV particular, in their crosshairs as a possible short squeeze target. I'm not going to speculate on that. I'm just going on the basics, supply and demand information right here. But keep an eye on that. Just for the record, I have been accumulating silver for 14 years. I continue to do so more as a wealth preservation strategy and anything else. I'm not quite sure the fiat currencies around the world are going to survive, so I'm going into hard assets. Just a little bit of a tidbit there for those of you that want to learn how to manage risk and preserve your wealth. Silver, I believe, is a great place to go for that, as well as gold. I'm not going to get into gold right now, but stay tuned to my Twitter page, stay tuned to the Facebook page, stay tuned to Market Rebellion, and I will continue to give you updates each and every week through the weekly market report. Have a great weekend. So long.